The Beef Market Update with Ann Dunford on RealAgriculture.com is brought to you by Haney Farms. Do you need seed? Find us at haneyfarms.com. We're here on RealAgriculture.com for another edition of the Beef Market Update. We're joined, as usual, by Ann Dunford. Welcome today, Ann.
Hi, Sean.
And this has been kind of crazy the last couple weeks. This week we're dealing with this MF global situation. We're dealing with a lot of USDA reports, cattle on feed reports. What is your sort of take on right now some of the volatility that's out there in some of the commodity markets and more specifically the beef market?
Well, it's crazy, Sean. I mean, we've talked on this show lots of time in the past year about volatility. And once again, it's got to be the topic of the day, of the week, of the hour after last week, and even coming into this week. Whether the big move we've seen in the Canadian dollar, we started early last week above par, back under par now. Look at what's happened in the live cattle markets. U.S. Texas started off early last week, $2 lower. By the end of the week, they were $3 higher. So it left live cattle futures just chasing it like crazy, and limit up day in live cattle late last week. So again, whether we're talking about is the topic of the day or the flavor of the moment, is it Greece? Is it Italy today? Is it this global fund? Is it what's gone on with some of the chitter chatter about Japan? Is it the Walmart offering choice product? I mean, it seems like even just in the little cattle commodity world, we've got so much going on that at the start of the day you go, okay, what's it going to be today? Like, is it going to be something that shoots this thing higher or shoots this thing lower? There's going to be a storyline, but it's hard to figure out until we get into the day which one it's going to be. So crazy volatility. $7 move in live cattle futures last week, Sean.
Well, I think what's difficult though is that prices are historically, they're relatively high. And so when we see this kind of volatile action, a lot of people that are a little bit more to the bearish side or tend to think a little bit more bearish think this is it. This is the move down. And it puts producers a little bit on edge. Yeah.
Now, mind you, I think, and you're going to see the fundamentalist in me, I'm going to stand back and still say, in the big picture, in the overall longer time frame, it's still going to be the fundamentals of supply and demand that drive this beef market. But in between those periods of time, you're going to get some wild fluctuations that are going to satisfy the bear and they're going to satisfy the bull. So that's kind of the situation that we're in today. But I still think if you sit back and you look at U.S. fed cattle supplies are at their tightest point, last week, this week. That's why we've got this 120 plus fed market. Supplies are going to increase into the winter. Then you're going to see some decrease on the live cattle futures going forward. So I still think those things are the big picture drivers, but day to day it can be wild.
Right. And so what I'm taking from what you're saying is that, don't panic. Prices the fundamentals are still there for a strong market, whether it's calves or fed cattle.
Absolutely. And again, we've talked about this for the last several weeks as well. There's been plenty of opportunities on these crazy up days or down days on the Canadian dollar where somebody can do some most certainly some hedging and pricing at profitable levels. So they aren't by the minute available, but they most certainly have been available in certain given moments.
Yeah, let's talk about a more stable market, which has been the calf calf price. It's been strong but stable.
Very strong and stable. Yes.
What are you seeing in the calf market right now?
Well, of course, the calf run was very slow in getting going this fall. Not a big surprise. Phenomenal grass conditions, lots of forage in Western Canada. So that was a situation that would lead you to assume the calf run's going to be later than we've seen, say, in dry years like we've had in recent years. So that meant a late calf run. So runs kind of got behind as far as numbers are concerned. In the last several weeks, we've had some good runs happening in Alberta and Saskatchewan. Will they catch up? No, I don't think they'll ever catch up because we've got a smaller calf crop. So we're not going to catch up with last year. And then the other impacting factor, of course, is it does look like more heifers are being retained, whether it's just to get into 2012, whether it's to take to a grass program next year. But the bottom line is we aren't seeing as many heifers move through the markets this fall.
Are we starting to hear about some forward contracting of grass cattle for springtime?
There's been a little bit of both. I mean, I think there's been some feeder contracts out for that March, April, May timeframe. And I mean, shoot, with where the feeder cattle futures were, if you want to look out all the way to next August, September, there's been some, 150 U.S. futures markets for feeder cattle out that far. So opportunity, opportunity, opportunity. It's been out there.
Yeah. So if you look at this calf market, what is it telling you? Is it telling you that boy, these are great prices? There's more of this to come, or does this feel a little bit more like it's sort of that once in a lifetime situation? How does it feel to you fundamentally?
Well, first of all, these are good prices, but I think, Sean, long overdue. From a profitability perspective for the cow-calf producer in this country, it's been 10 years, pretty close now. So this is an absolute necessity as far as I'm concerned. And I most certainly hope, and when I look at the fundamentals, I think it's the launching pad for more that lies ahead. So I don't think, I still believe in the cattle cycle. It's obviously been impacted with, various things that have happened from 2003 and then cool and all the rest of it. But nevertheless, I do think smaller supplies that lie ahead. Our cow herd is smaller. You can't argue that. Almost 25% smaller than 2005. So all those things are basically going to mean we've got smaller calf supplies over the next several years. This is not a flash in the pan.
So really put your fundamentalist hat on. Where are we at in that cycle? If I'm a rancher right now, I'm thinking about this cycle because I hear about 7-year cattle cycles, right? So are we at the front, the middle? I know we're not at the end. So where are we at in this cycle?
Well, of course, we've sold off this herd and we haven't kept heifers in this herd for numerous years. And so it looks to me like we're just on the verge of starting to make those decisions. And of course, they don't show up in the stats for people like me to really see just yet. But I anticipate that those are the kind of numbers that I'm going to start to see as we move into 2012. Less heifers in the slaughter, less heifers in the feedlot, things like that are going to tell us, okay, finally the rancher has got the profitability signal that he's been watching for and moisture to possibly keep some cows and heifers around. And again, not a blanket thing. We've talked about the demographics of this industry, but for those that are wanting to be in this business for a longer period of time, this could be the start of the next growth phase. But again, those phases last a while, Sean.
Yeah, well, and we're about to get into the bred cow and heifer season, which really I think is going to prove interesting this fall. But we will save that for next week. So, and we will talk to you again next week.
Sounds good, Sean. Thanks very much.